All right. Good afternoon, everyone. This is Rich Swerbinsky with the Mortgage Collaborative here for a special election day version of the Last Week in Mortgage Today, our weekly webisode, talk show, whatever you want to call it, every Tuesday at 2 o'clock Eastern, where I kind of handpick one of my favorite people from our lender member network to join me as a co-host for a very casual 30-minute jaunt through everything that's happening in the mortgage industry. And today I am thrilled to be joined by my friend, Patti Conley, the SVP Investor Relations from Prime Lending. Patti, thanks for joining me.
Thank you for having me.
And you are in Dallas, Texas, considerably warmer than Cleveland, although it's supposed to be beautiful the rest of the week here in Cleveland.
It's pretty nice here right now, too. As you can see, I'm back in the office. We're on a rotating schedule, and it's going pretty well.
Awesome. In Prime, big company, and like for the ops, I'm assuming everybody's still from home, right? Like the bulk of your just operational personnel.
Yeah, all of our underwriters and closers already worked from home, so that was a non-issue. But the other departments that are up here, we're the ones that are rotating. And if you're not comfortable doing it at all, of course, you can opt out at any time.
Okay, excellent. And have you been, you're in Dallas right now. Is that where you're from, or did you move there?
No, I'm originally from Boston. So I was telling Amy, I remember what the seasons were like. We really don't have seasons down here, and I miss them terribly, but we don't have fall and spring. So we're in winter, our version of winter, which could mean it's 80 degrees on Christmas Day.
You're right, exactly. Yeah, it won't be 80 here in Cleveland that much, I can assure you. But want to just remind everybody, clearly a laid back and interactive format here. So any questions, comments, thoughts, anybody has at any point, please feel free to pump them into the chat, the Q&A, unmute and speak. And, we're happy to talk about it, react to it, anything that anybody in attendance has. But how can we not start with the presidential election on election day? Normally, I'm one of those people that I avoid politics because I'm just a very positive person, and politics, especially these last 10 years or so, has been pretty negative. But I'm a junkie around election season. So I got some Great Lakes Christmas ale in my fridge, and I'm ready to hunker down. And I'm just really cheering for some drama and chaos tonight, and something to get excited about on the TV. Any big election night plans for you, Patti?
No, just like you, I've got my wine ready to go as soon as I get home, and I'm gonna sit down and watch it.
Awesome.
I'm looking forward to being over some of these negative ads. I mean, it's just I'll be happy when it's done, and it probably won't be done tonight, but just some decision in the process of being made.
I look at presidential elections like I do going to Vegas. Like I love the thrill of it. And then when it's over, I'm like, okay, I don't want to see that again for a while. I'm done with that.
I know, but what are we going to do after this? Well, I'll have to be looking at the COVID numbers again and stressing out about that. I agree with you. It's somewhat entertaining.
Yeah, you're right.
Every day it's something new.
It has been a diversion from, if I see one more coronavirus stat, I'm going to break something.
I agree.
So as it pertains to our industry, I probably say this every election just because it's something to talk about. It feels like it's true right now that this is the most pivotal presidential election for the mortgage industry. We're in the midst of what could be an all-time record year. I think at the worst, the second biggest year for originations of all time. Fannie and Freddie have been slowly, for it seems like decades now, preparing to leave conservatorship. The most formative, kind of steps that we've ever seen along those lines, with Calabria clearly motivated to do that. So the future of Fannie and Freddie surely hanging in the balance on some level with tonight's election. The CFPB, the last lender I was with before taking this job almost 6 years ago, shortly before I left it, we exited all of our marketing services agreements because we were really skeptical of the CFPB leading through enforcement actions and just having no black and white certainty on what we could and could not do in our partnerships with Keller Williams and other realty offices. So a lot at stake for the industry, depending on the elections come out. So like politics and like personal preference aside, what are some of the things you're looking at, just, one way or another, the way that the election goes this evening, or maybe not this evening?
So if Biden wins and Calabria is gone, one of the things we're thinking about is, are we really going to have the adverse market fee? Because he's not going to be so ready to get everything out of conservatorship like Calabria is. And is that something that could be helpful to our market? Also, going back to the Obama type affordable housing goals, and of course his tax credit if he does the $15,000 first-time home buyer tax credit. So on the one hand, that could be positive, but we know it's going to come with more regulation, more taxes. So there are going to be other things that impact it. So very curious about that. And also you talked about the CFPB, the heads roll is what I'm reading in all the papers, that, some of the first thing Biden would do if he was in there is take out some of those top players. So that's very interesting to me, how he's going to approach the adverse market fee, or if he's even going to touch it.
Some great points. Something I really didn't even think about, but that is possible, that if Biden were to win, I mean, think about the economic impact on our industry if that half point on all refis was just to go away. I mean, it would be ridiculous amounts of money in the pockets of mortgage lenders. So that's something I really hadn't even thought about. But yeah, certainly possible. Because I think Calabria, Ben Carson, Kathy Kraninger, CFPB would be the first three heads lopped off after a Biden victory.
Yes, could be.
Yeah, and if Calabria goes, the fee could go. So on the flip side, though, you mentioned the regulation piece of it. I think, just talking to our lender members, our collaboration lab initiative, we've been doing these now for the last few weeks. Actually, right after this show, I've got a collab lab with 14 or 15 IMB member companies of ours, all between like a couple $100 million a year and $1 billion a year. And, I think for the first time in a long time, lenders don't feel like the fear of the unknown on the regulatory side, where, I think what all mortgage lenders had been saying up until this current version of the CFPB is, I'll follow the rules. I just need to know what they are.
That's it. Just tell me.
Don't be
exactly.
opaque and then rule through enforcement action. This CFPB has been, much better along those lines, actually going as far as a few weeks ago to clarify what mortgage lenders have been asking for many, many years, to clarify the legality or illegality of marketing services agreements. They kind of come out and said, hey, as long as you do these things, they're legal. But that could all change. You're right. With the Biden victory, right. Certainly you would have a more aggressive CFPB.
Could happen.
So we'll see what happens tonight, and certainly a lot hanging in the balance with the election this evening. And as you noted, positives and negatives depending on either side who wins. So moving on to definitely positive news. We've been just talking about on this show every week. We're covering the news headlines, and there has not been a week that has gone by in the last at least 10 or 12 where we haven't had some really positive leading indicator on the housing market. The latest was September pending home sales up 20.5% year over year versus September 2019. Certainly a little bit of that is the delayed spring buying season happening later because of the coronavirus. But what are you guys seeing at Prime just on the purchase side of the business? Do you feel like it's exclusively a byproduct of that delayed purchase season? Or do you think there are maybe some underlying things going on in the market that are contributing to the really, really strong home sale numbers?
So I think it's definitely a supply and demand piece, and I don't see it going away unless something drastically happens to the rates. I think would be in the same type of environment until at least next summer.
Yeah, certainly the rate environment has not hurt. You know, you got 30-year fixed rates that have been in the twos for a big chunk of this year. The person that's on the fence about being able to afford a home, or maybe can afford a $250,000 home at 4.5%, but can afford a little bit more at 2.875, has certainly not hurt. Other news headlines of the last week is the NBA and a couple other organizations came out with their projections, updated projections for this year and next year. I think NBA came out and projected this year would be just under 3.2 trillion in total originations. The original projections were for it to be about 2. And then next year projecting 2.5 trillion, which would be another great year for the industry. How is prime lending, like growth aside? I know you guys are always growing, but just assuming you had the same set of LOs and nothing changed, like how you guys looking at 21 versus 20?
So I checked with our head of sales, and our phones are still ringing off the hook for refis. So that hasn't changed, which brings us into early 2021. And I also personally think there's a lot of people sitting on the sidelines, including myself, that if the rates got down to a 2, I'm at 3 and 3/8, and I say, oh, I don't need to refinance. But if it got down into the 2s, I think there's a whole new wave of people that would refinance. So I think the numbers are way too low that the MBA has out there, but I'd rather have low and be right than high and be wrong.
Yeah, and typically will err on the side of being conservative. So yeah, but I mean, all in all, it looks like it's going to be another really good year for the industry, and certainly a great one this year. And the whole like interest rate, like part of the picture, it's kind of like a double-edged sword, because typically the things that drive interest rates lower are bad things for the economy and employment,
Right.
as evidenced by this year. But yeah, some have projected that if we do see another, outside of what we're seeing now, like a bigger spike of the virus as we get into the winter, through stimulus and, more aggressive buying into the bond market, we could see even lower rates that would allow you to refi, it sounds like.
Yeah, and I hate to say it, but I wish the rates would go up a little bit so our ops staff would have some rest, because they are just working around the clock. And we let everybody roll over 1 week, but other than that, you have to take your vacation. So I think December is going to look a little bit different, with people having to take vacation instead of losing it. So that's just a concern, that they're just being overworked and there's no end in sight.
It has been, yeah, definitely a common theme on this show and just with our members over the course of the last few months, just the fatigue factor on the ops staff. Like, it doesn't matter how many meals and wine baskets and cookie trays you send them. They're just like, just please stop taking apps, and,
Really.
you can keep the wine. So, but was Prime, how remote was the operations staff of Prime pre-corona?
So we were all set up to work from home. But I think I mentioned earlier, all our underwriters and closers work from home because, there are a lot of mortgage companies in Dallas, and obviously all the talent is in Dallas. So we early on let people work from home just so we could get the best talent. And we have lost a couple of people for bonuses and larger salaries, but on the bright side, 2 of them have come back already. And we are trying to fill underwriting and closing positions like everybody else. And we were very fortunate. We had an underwriter come over, and she had such a good experience that she got 4 of her friends to come over. So that's been very positive. But like everybody else, we're just trying to do the best we can, not hire and let people go when business is down, making good choices.
It's so tough because everybody's staffing to the gills right now.
Right.
And eventually the worm is going to turn.
Yeah, we don't outsource anything. We outsource our post-closing, a little bit of our post-closing piece, but other than that, we don't outsource a thing. So I do believe in outsourcing, but it's just never been a big thing for executive management. They like to do everything internally.
Yeah. And even that though, I mean, those firms are so inundated right now.
Right
Like
now they're, yeah,
we have a lot of members that are trying to get signed with our partners in that space, and they're just unable to onboard new clients right now because they're so inundated.
and what happened with COVID and overseas and basically them shutting down, that just scares me to death, that they had to shut down in India completely, and a
Mhm.
lot of people were depending on those services.
Yeah, and that's right. Yeah, that's another very real part of what's been going on this year is, yeah, a lot of those companies are obviously overseas and offshore and, you know, different levels of the pandemic impacting things. And yeah, and that's caused concern for a lot of our members that use those companies. So um what about, I'm interested to get your take. You know, clearly one of the things that has been dominating the headlines in our industry has been all the big mortgage companies going public, Rocket and United Wholesale and Guild and Caliber and AmeriHome and Loan Depot are still, they were gonna, and then they rescinded because the stock market kind of tanked last week. And now they're trying to figure out when they're going to do that. But prime lending, I think I didn't even know this until you guys became a member, is a wholly owned sub of a big bank in Texas, right? Plains
Right.
Bank.
But then the bank is owned by Hilltop Holdings, so we're already publicly traded.
Okay.
So we're already out there. But for the IMBs, I think it was very, very smart. They're always having to chase down sources of money, and they can raise capital right now and not have to go after those sources. I thought it was very smart and good for them.
Yeah, it's, you know, timing is everything. And obviously, companies are having a windfall year in terms of volume and profits and kind of seizing on that momentum, to take the company public, to raise some additional money to continue to scale. And I mean, just from afar, it seemed like that was something that really benefited prime lending, you know, especially, you know, when you guys were in your really big growth spurt, you know, but between 10 and 5 years ago.
Yes, very big. Right when I started, it's
Yeah.
amazing what's happened to us, and we're still a small company on the top. You know, we haven't added a lot of people. Same people have been here. I've been here for 11 years. Some people have been here for 30 years. It's a good group of people.
Awesome. It's the last week in mortgage today. I am joined today by Prime Lending's SVP Investor Relations, Patti Conley. We've got about 10 minutes left in today's episode, and certainly any questions, comments anybody has about anything we're discussing or not discussing, please feel free to drop them in the chat or the Q&A, and we'll be happy to address them. So one of the things I wanted to touch with you on is just emerging technology in general. I know Prime has always been a very tech forward company. At the same time, I hear from our members constantly that, you know, like a lot of good things about this year. One of the challenges of this year is that many of our members have struggled to, I guess, advance forward emerging tech initiatives that were in their brain in Jan and Feb and March, at first, just because of the uncertainty of what was going on, and then just the crush of volume. How has Prime navigated that this year?
So this is pretty interesting. We actually rolled out a new LOS, Blue Sage.
Right. Yeah.
Um,
Yeah.
March was the big deployment, starting with all the branches. We had already decided to do all the training virtually in modules, so we had that all covered. But our branches are completely off of it. We're just moving the last couple of programs over, and very happy with it. It's more like a ecosystem. You can plug in APIs, so we can take those out and plug those in. But just the adoption has been fabulous. Our last system was Dorado, which CoreLogic bought, and we actually lost loan officers over how difficult that system was. And we have older loan officers here, and they just, they were able to grasp the technology and go right with it. So that has been a success story for us. And because of that system, we also had our e-close going on at the same time, because that's what the system was ready for. So we actually rolled out e-close. We did the hybrid e-close completely with all our investors first, but now we're fully doing e-close.
Man, so you guys got a lot of important stuff done in the midst of this. Sounds like you rolled your LOS right before all hell broke
Yeah,
loose.
who knew?
Well, I guess that's probably the best time to do that,
Yeah, we had everybody's attention. Everybody,
right.
they couldn't go anywhere.
Everybody's from home. They can't do
That's
anything.
right.
They're forced to learn the system, and just the pure repetition of all the transactions you've pumped through it, right?
Right, right. It was good timing.
Too funny. Has Prime, what about some of the next level stuff that we know is coming? Artificial intelligence, document recognition, robotic process
So we
automation.
already have the document recognition within the system. We actually don't even know all the functionality our new LOS can do, because we've just integrating it into the branches and getting everything lined up has been a priority. So our goal is to, at the beginning of the year, when we're totally off our old Dorado system, then we're going to see if there is anything that we're missing to be able to plug it in, but to get day one certainty, totally up and running, and pushing forward with more of the e-close. Right now, the e-close isn't a money saver for us, because we're still manually, walking the loan through to make sure it's right. And a lot of our servicing partners don't even have e-vaults. So waiting for that to all happen, we have to send it to certain servicers. We have to make sure that it's tagged along the way of what kind of loan it is. So hopefully next year it'll be a much smoother process.
I can't tell you how many years in a row now I've been saying that next year is the year that full e-close is spawned across the mortgage industry.
Yeah, but it's not us. It's the
right.
servicers. It's all the other players that have to be on board, and the volume, I think, really took away from them being able to get those processes up and running.
Yeah, and the remote online notarization piece is still somewhat of a limiting factor as well. It
Right.
seemed like at the beginning of the virus that states were starting to pass like executive orders to temporarily allow it, and it felt like there was all this momentum rolling downhill to, okay, all 50 states are going to get remote notarization and all that stuff that seems like we should have already more broadly. But even still today, I was just talking to our friends at DocuTech yesterday. It's coming and advancing, but still not fully there.
Right.
Yeah. What else? Any other big initiatives at Prime, or things you guys are looking at 21 and beyond?
Well, I think strategic goal wise, everybody has on their platter just the affordable housing in the minority market. Chase is doing that $30 billion push. It's been on our plate for a while, but this is the year that we're really putting some resources behind it and getting that out. So I think you'll find that many companies have that to the top of their list now, which is interesting. It's always been there, but it just hasn't been, has a lot of people supporting it now than it was in the past. So excited about that, because it's way overdue. But having that, Chase being on board with it, and I'm sure Wells already has something going, but maybe not in the correspondent channel. Chase is opening it up in the correspondent channel.
That's awesome. And at the outset of the program, you mentioned something that I really hadn't thought about. And one of the positives of a Biden win for our industry tonight would be, it would be very likely that we would get some sort of first-time home buyer tax credit program. You noted the program that the Obama administration rolled out that, I remember it was very impactful on the industry. It was probably 8 or 9 springs ago now. But I distinctly remember that and the impact it had on the industry, and putting some people in homes that maybe otherwise would not have been.
I agree.
Yeah. So that's something
It'll
else.
be a good thing.
Yep. So, and there, Maxwell, the point of sale provider, good partner at TMC, they put together
Yeah.
just an unbelievable mortgage industry issue primer that if you just look them up on LinkedIn or their website, you'll be able to find it. It is really incredible. They put a ton of work, and it is just, if you want to read something that just clearly and definitively breaks down both candidates, housing policies, and potential impacts of either side winning. Well worth it's probably a half hour read if you read the whole thing, but and I have ADD where I can't read anything for half an hour. I was engrossed in that thing.
Good to know. I'll check it out for
It's
sure.
it's worth checking out. So we have just a couple of minutes left. If anybody has any questions or comments, this would be the time for it. Otherwise, we will finish up here by talking about one thing that has come up on these calls, Patti, has just been all companies are hiring and having to train new employees. There's just not enough skilled humans in America to, fulfill all the people we need right now to close the amount of volume that's pumping through the system. How has Prime handled just onboarding, training, recruiting? I mean, it's obviously been primarily virtual, right? You guys just using Zoom like everybody else and trying to put them in front of your best training people. How have you guys handled that weird part of this year?
So we're very family oriented. So a lot of people's kids also work here, even more so the kids that would have been in school that are home. They're here. My son's worked here for 6 years. So that's been a start, and they've been able to bring friends in. So training can start in post-closing shipping, trying to expose them all to different apartments. We had a full, Xenix type training piece a couple of years ago for loan officers, but it didn't really work at the time because the rates were rising and they were on a salary. And then when they had to go on to commission, they really didn't have, the backup to support that commission. So we don't have anything solid except mirroring, like the underwriters, of course, we have a definite course for them, but for processing, it's really come see how I do this or come look at my system and see how I'm doing that. But we've been very fortunate in hiring. We always used to say, oh, we only like to hire experienced people, but nobody can do that anymore. We have to start from the beginning, but we don't have anything formal right now. It's just more here, the department you're going to work in right now, and this is how we do things. In fact, I would love to hear anybody else's best practices about what they're doing in that space, because I think when it slows down a little bit, we would really like to have a formal program.
Yeah, it's definitely when volume does slow down, it's going to be interesting to see how a lot of different things are unwound. And, certainly part of that picture is going to be what is the situation with the pandemic? Are people still working primarily remote?
So that's been interesting too, because even though we have all this space, by the time you have to separate everybody, you don't really have all that space. So I'm sure other companies did. We did a big survey about, do you want to work from home? Do you want to come in part-time? Do you want to, what would you like to do? And kind of, we actually were surprised how many people wanted to come in. I don't know if they, have small kids at home and just want a break, but we are really revamping that to be flexible with what their needs are, because I think that's important for you to keep the best people, to be open to what they need for their home life.
Absolutely. Excellent. Well, our time is up. Patti, thank you so much for joining me. Always enjoy talking mortgage industry with you. Really appreciate you taking the time out to chat today.
And thank you, Rich. And thanks for putting these together. It's so nice that we can all stay in touch.
And I want to thank you again, like Prime Lending, one of our first members ever. I will never forget this. It was my first TMC conference ever. We had literally 6 members, and you attended one of our conference. You were one of about 50 people and 6 lender humans that were there. And in our closing comments, you stood up and I think you like wrote the check like right there.
I
And
did.
yes. And that was a big moment for us. I was like terrified. I had just started. It was like a startup. I had left like this super safe bank job, and I was. It was just a moment that I always look back on, and really appreciate your the leap of faith that you took with TMC. And
It's a great experience, and I just having a wonderful time with you guys and the rest of the folks from the Mortgage Collaborative and the other lenders and vendors.
awesome. Thank you very much, Patti.
Thank
Thank
you.
you very much to all of our attendees. And as always, we'll be distributing this via podcast and video, all the different channels that we put that out through. And really appreciate your time, same place next week. I'm joined by Amy Hanks from Beverly Hanks Mortgage next week, Tuesday, 2 p.m. Eastern. This was the last week in Mortgage Today. Have a great election day, everybody. Take care.
Thanks. Bye.